think it's really interesting that these post-pandemic stocks and investments, that on one hand, it might be easy to say, oh yeah, that's going to go back up because they were popular before and now we're coming back to regular life. But in fact, we do have to take into account and think a little more deeply about how the pandemic has changed us and changed business.
Welcome to Women Take Stock. This week, well, again, it's a little bit of an interesting week because, well, we have Tula re-energized from Texas.
Hello.
But unfortunately, Dana isn't able to join us today. So we're going to have to see if us students have learned anything from our wise professor, because Dana knows way more than we do. But we're catching up. We're catching up.
Yes.
And we're going to talk about that. We're going to talk about how we are learning, what we are learning, and how things are changing. And also what's pretty exciting is that we've had some cool comments from some of our listeners that we're going to talk about towards the end of the show as well, because it's just exciting. We're so excited. Please connect with us. But first, let's start the show.
We are four friends all at different places in our financial and personal lives, looking to pull back the curtain on the seemingly mysterious, often testosterone-driven world of stock investing.
And if four women without business degrees can figure out the market as a side hustle, so can you.
Join us as we learn the basics, buy, sell, scratch our heads, hold our breath, commiserate, and celebrate, hopefully more of the latter. We aren't experts, so please note that this podcast is for general information purposes only.
Yeah, anything resembling financial advice is purely coincidental.
That said, we are hoping to make a little or a lot of money doing this. And if money is power, we want some of that too.
Awesome. Welcome again to Women Take Stock. This week, we're just going to riff. No.
Yes, we're all at interesting places in our experiences. I missed the last podcast, which I was bummed about, but I literally did not have power or water or heat because I was in Texas. I am in Texas, rather. And this week, I'm happy to report that I'm back in my apartment with all of my utilities running. I'm warm. But there are, unfortunately, still people who are struggling right now. There's still about 1 million Texans who are without water. Their pipes have burst and there just aren't enough plumbers around to fix it all. But it's interesting because I'll tell you what, my next research project for my stocks is going to be in the energy sector and also the survivalist sector. Because I really think there's going to be a run on, seriously, Bunsen burners, propane,
canned water,
generators. Shout out to my brother and sister-in-law, John and Cindy, for literally keeping me alive last week.
Thank you.
Some of that was we set up like a little porta potty situation downstairs in there because we couldn't use water. We were melting snow for water to use for the toilets. And then we were having to use that water to boil to drink. I will say it was a little bit traumatic and it gave me insight into what people experience on a regular basis in many parts of the world. But I also think that people are going to be stocking up on what they call those those dried food edible meals that like the astronauts use. I think that's going to become
meals ready to eat, MREs.
Yes, MREs. Thank you. MREs.
They're not very tasty, I'll tell you.
Apparently there's a company in Boulder that my aunt was telling me about that have made really delicious tasting MREs.
Really?
And I looked, they're not public yet, but
see, this is my question. This is what I've been talking about. I've been thinking about it. It's those little niche companies that as this world is being so shaken up, have the potential to explode. And so at some point in the near future in my little investing journey, I want to explore how I, as an individual without a huge amount of capital to invest, can still get involved. Like, how could I invest in a little company that's making good tasting MREs for all of us? What do they call the people who are like afraid of the apocalypse and we're all hanging out,
the doomsdayers?
The doomsday. Yeah. And I think we're all going to become apocalyptic investing.
Yes.
Apocalyptic investing.
I love that. That's a new term you just created.
Yes. I think also, JJ here, that it's not just about thinking the apocalypse. It's not just about feeling the apocalypse is around the corner. I think this episode in Texas, the storming of the Capitol building, it's really undermined people's feelings about how the government looks out for their welfare and is in charge.
Yeah.
Basically.
And the pandemic too.
And the pandemic too, that so many things have broken down that, even kind of manageable shortages of toilet paper and that kind of thing, that suddenly I think regular folk who in the past would have said, I don't worry, there's a convenience store down the block, are now suddenly thinking, oh, I need to be more prepared.
Yeah.
What was interesting for me this week related to this was in the past couple of weeks, we had seen that as when stocks were going down, we would see that crypto was kind of going up. It was like a hedge against it. And this week, when things were starting to feel sort of unstable because of Texas and everything, crypto wasn't having a good week. And this idea that I was having that crypto was going to be that safer space in some weird dimension.
Yeah. I feel like I feel like crypto suffered a double whammy this past week because Janet Yellen came out and said it takes a lot of energy to mine it. And then in the middle of the Texas energy crisis, and maybe some people got cold feet. I mean, I think it'll go back up.
Well, it was reported that there was one Bitcoin miner who sold a shed load of Bitcoin.
Oh.
And the thing is, they say because the market is so small that it was something like 8,000 coins. So that can really move the market. And basically it starts going down because the market was flooded. And then more casual investors go, and start to get out. And
it's such a sensitive market, right?
Yeah. And, as our sage professor, Dana, who's not with us, has been telling us for months that fluctuations are the norm in crypto, in the stock market,
regular
overall,
stock market,
the regular stock, which we'll talk about. I have some stuff to say about that.
Oh, well, I want to hear
in a little bit.
I think for the next time we do a solely crypto focused show, it would be really good to get a better handle on what mining is, like stuff.
Yeah, and talk about the energy uses. It's interesting what you were saying, JJ. It loops back to what you were saying earlier about our losing trust in the government due to all of these disasters and events, that crypto, because it is not beholden to any government regulation.
Not entirely, though, just to be clear, there are some regulations.
Well, not entirely, but it operates outside the fiat system, right? And so it doesn't depend on what the value of the dollar or the pound. So in a weird way, for these people who are like, let's become self-sufficient and doomsday or get off the grid, it might be more appealing for them for that reason.
Right. What I think is interesting about what we're talking about here is we're sort of thinking about the future, which makes us think about the post-pandemic world. I mean, we're thinking about, where you're talking about energy and how crypto is going to use energy. We're talking about futuristic stuff. So let's talk about the near future, which is hopefully very, very soon when we're going to be in a post-pandemic world. And I know, JJ, this week you've been looking into some, you've been texting us a lot about ideas for things we could invest in that would somehow capitalize on life opening up again. And so I'd love to hear a little bit about what you've learned.
Yes. Well, I think this is really interesting because we all used to work in magazines and newspapers and media, and some of us still do, that I feel like I'm just bracing for this slew of stories that will be about getting, quote, back to normal. And it'll be about, getting back to your regular holidays and seeing your friends in a regular way and all those things. We have to remember that not everything will be back to normal. COVID and the pandemic have changed us and changed our behavior. And some of that is in just short-term ways, and some of it is in longer-term ways. We're going to be grappling with that basically as societies for a long time, as globally, because this has been everywhere, right? But I've been thinking about, I read a report about beauty skincare companies predicted to do well post-pandemic, as people leave their houses more and go out more socially and to the office.
That makes such sense, because I will tell you, I go outside and I don't put on makeup, and sometimes not even sunscreen, because why bother? My entire face is covered up, especially now in the winter with the mask and the hat and the sunglasses. Like there's nothing that can reach this face.
You're like the invisible, what's his name? Reigns, the invisible man. Yes. Well, and so there's this thing called the lipstick index. And I love this. So it was coined by the former Estee Lauder chairman, Leonard Lauder, in the early 2000s. And it refers to the typical resiliency of cosmetics with makeup seen as an affordable indulgence when bigger purchases are out of reach. So that even if there's a recession, even if people are poor, that this lipstick index, that holds true. And you would think in a way, oh, women are going to be going out more. They want to pretty up.
They don't want to look like they've aged 10 years in this 1 year.
Exactly. From all that homeschooling and apocalyptic
stressing
planning. But in fact, that's not going to apply in the same way. One, that we're going to be wearing masks for some time, who knows how long.
Right.
And that because we've been at home, we are wearing less makeup, becoming more used to wearing less makeup, and people are more focusing on wellness. So that instead of the lipstick index, it's going to be about skincare, about natural skincare, green skincare, eco, about, paraben-free, cruelty-free, et cetera. And I think it's really interesting that these post-pandemic stocks and investments that on one hand, it might be easy to say, oh yeah, that's going to go back up because they were popular before and now we're coming back to regular life. But in fact, we do have to take into account and think a little more deeply about how the pandemic has changed us and changed business. Along those lines, I just wanted to cite a couple of really interesting stats I got. Some of these are focused on the UK, but for example, during lockdown here in the UK, demand for products that would at one point be essential, daily, foundation, lipstick, sales were down more than 70%.
Wow.
Yeah.
Yeah. And that'll come back up a little bit or somewhat, but you're saying it may not come back up to levels.
Or it will take a while. I mean, I will say, it's funny, for years you would see pictures of, people in Asia wearing masks and you'd be like, God, like that's so great. And now I'm like, I haven't had a cold in a year. They were onto something. I mean, I could see wearing a mask outside pretty much forever. I'm serious, especially in cold and flu season. Like, why not,
Yeah. So just along those lines, though, this other stout, Cult Beauty, which is a particular company, their lipstick sales, we're talking about their lipstick sales being down, but skincare sales have more than doubled. And so
interesting, because you still show some skin when you're in and Zoom, you're still in Zoom.
And health. And we're more thinking about health. So
let me ask you a question, though, along those lines with health. What is the connection between the wellness industry and the pandemic? Is it that people are more concerned with being healthy, having good immunity so that they can overcome a new virus if they contract it? Is that sort of the connection?
It's really a consumer's growing consciousness toward wellness and clean beauty. I mean, we've been talking a lot about just the health of the planet, the health of the world population. And then we've seen a lot of these news stories that are about people's mental health and what we're eating and all that. And I think,
so it's refocusing. What does it mean to be well?
So like, have you been thinking specifically about any publicly traded companies that exist in this realm that are maybe interesting to look at this point?
Yeah. So I was looking at, Zacks, the
Zacks Index, it's a website, right?
The Zacks Index. Yeah. So they have a Zacks Cosmetics industry list. And I'll share this link on our site again, because it talks about all kinds of factors that we may not think of at first. Of course, reduced store and salon traffic, but also the disrupted travel retail network, supply chain bottlenecks. So, but there are some companies that they've picked out as being good that I think are really worth looking at. Like some of these I'm not very familiar with: Helen of Troy, New Skin, Elf Beauty, Estee Lauder. Of course, we've heard of that one. But I think actually, for me, I was even starting to think about, what about injectables? Yeah. Because while you might be spending less on makeup, that your eyes are visible. So I wonder what's going to happen with Botox or with Juvederm. And those
are already,
I mean,
our plastic surgeons and dermatologists seeing I've seen that they're seeing a really big spike because people are staring at themselves on Zoom all day going, oh my God, this filter can only,
what
I know,
here?
This filter can only do so much. Thank God for the Zoom filter, by the way. I had to do a call recently and there was no filter because it was some other platform. And so I didn't have my filter and I was like, oh, whoa,
is that person
can we please turn off video?
I know. When I look at myself in the mirror and I don't have the Zoom filter, I'm like,
it's like I'm imagining, Jen, I'm imagining you. You're like, oh no, this call's about to start. And then I imagine them clicking you into the meeting and you're wearing like a kind of Halloween mask.
You know what I should get like a big plastic film sheet that I could just kind of bring in front of my screen,
or gauze, just like
like the Vaseline on my lens. That would be great. Yeah,
exactly. Anyway, I think looking at all those now will be very interesting, and I also think in the wake of all this, as we know, lots of women-focused businesses may be less top of mind for a lot of investors, so it could really represent an opportunity.
Yeah. Which is, this is something else that I think we were hoping to talk about is that we're talking about these niche-y kind of things, right? These very specific targeted investments, which is very different from, say, my 401k that I set up with my employer when I was 20, right? And so what's interesting about this is like the targeted nature of our investments right now make them more risky, but they also make them more exciting.
Yeah, it's interesting because when we first started this podcast, I will admit that I didn't fully understand how the type of investing that we were learning about, whereas we're picking our own stocks based on the research we're doing, we're supporting each other and sharing information, how different that is from the traditional passive investing that most people participate in via index funds, and where you will invest in, the S&P 500, for example, or the Dow Jones index funds that pull together. And I'm not going to describe this accurately. You guys correct me if I'm wrong, but they pull together. So I know this is where Dana would come in handy. They pull together a representation of those indexes. And long term, I looked into this because I was like, what is the average return on investment for the stock market and for these index funds? And over time, and it depends on, are you looking at a 10-year period? Are you looking at the period from the beginning of the stock market? Are you looking at the Dow? Are you looking at the S&P? But overall, the average return on investment for the stock market is about 10%. And this doesn't mean that every single person who's investing and that every year or even every month you're getting 10%. This is overall, let's say over 10 years. And that doesn't account for inflation either. So, but on average, if you invest in an index fund, you're getting maybe 7% when you adjust for inflation. What those investments represent is this sort of low risk, over time, long-term investing. What we're doing,
it's really important to have
and I think every woman out there should have one of these investments as a long-term safe bet. Yes, JJ.
And I think we should also keep in mind that like S&P 500 trackers, Dow Jones Industrial Average trackers, the Russell 2000, those are all different stocks, different companies on those. Yes. So you can have different kinds of trackers S&P did really well because it had so many tech companies in it over this past year. But absolutely, just backing
the NASDAQ is
give some of your money, of your investment to basically somebody else, right? Like to.
But that's not even somebody else. That's just tracking.
No, that's just right. That's passive investing. You can hire an active money manager who takes those investments and starts to really fine tune them in the way that we're doing, and you're paying that other person to do that. But what we're doing, and the benefit of what we're doing, is multifactorial, I think, to use an academic term, multifactorial, is that we are learning so much about investing. We are feeling the confidence of being able to do it on our own.
I thought
And
you were going to say we are learning and therefore the gray matter in our brain is being stimulated. So we're sort of holding off dementia and Alzheimer's, but go
oh,
on.
well, that too. But also importantly, we can take advantage of the bull market based on the news and the research we're doing, or you see it, you buy in, and then when it peaks, you can either sell or you can hold, but you are taking advantage of these fluctuations that we see over time that most people just ignore because over time that's going to go up, but you can actually profit off each one of those peaks. And then when it drops, you can buy in at a lower
I will have to
price
say though,
in the bear market.
That kind of timing the market is very difficult.
It is difficult, and studies show that, like, even experts,
and we do this.
We are not experts,
and we don't give
experts
advice.
who do this, and we don't give advice. Once again, this is not financial advice, but experts who do this do not necessarily beat the index funds or the market average. So the index funds are designed to meet that kind of like 7-10% increase over time. And active money managers who and these day traders that try to beat that market, most of them don't.
This is what's interesting to me about when we're talking about, say, post-pandemic investing or apocalyptic investing, is that actually we should be thinking of these as sort of shorter term investments because we're riding a societal shift, which will change, right? And so to be investing, sort of understanding that shift is really dynamic and volatile. I think that's where I kind of failed this past couple of weeks, actually, was that I don't have.
Tell us what happened, because you were telling us kind of during the week about what happened with your portfolio.
I was being a passive investor and I was watching things kind of going down and getting wobbly, and like some of my better holdings not just doing poorly. And I know that the stock market itself had a pretty shaky week, so it's not that surprising. But that I didn't have enough confidence in myself to just hit sell on a couple of things when I probably should have. Like my gut was saying sell, and then my heart was like, but I can't. And so
is that because you were looking at them as short-term investments? Because long-term, that wasn't the question, a bad idea, right?
It's the question that I haven't answered clearly for myself is, am I short-term investing or long-term investing in this particular portfolio? I think the answer is I need to do what we're doing. The Women Take Stock portfolio that I have should be a short-term portfolio because I do have retirement funds that are much safer, that's something that I am passive about, that there is a manager, it's just, I think, the whole point of this exercise is to get a little bit more, I've already said the word dynamic, but that is the word, to be more dynamic about how I'm buying and selling rather than just being kind of like, I'm just going to wait and see.
It's about kind of continually evaluating. That's what I did this week. And I didn't get crushed this week like some folks did. I mean, I didn't love seeing some things go down, but I think that continual, as you're saying, Jen, the continual evaluation and really saying, what do I want? What do I think is really going to happen?
Right. And trusting yourself a little.
Yeah. And that can change because for example, with crypto, I think I started investing in crypto as a way to make some short-term gains. And I did. There were a few times that it peaked and I sold and made a couple $100. I mean, not a lot, and then I kept reinvesting, and now seeing it kind of go up over time, and it did just hit an all-time high and then really drop. And it was the biggest span that it's ever had in its history. But I'm looking at it as a long-term now, because I think that there's something about crypto that is, we've seen these big name investors and companies getting in on it. So it can change. And then I don't know, maybe next week it'll go up again and I'll sell off some and it's a short term. But see, we can do that because we are managing.
Can I just say,
Tula, this comes back. Remember when we did the show with Frank Murtha, the psychologist who studies stock market psychology? It's that I still haven't really listened to his advice about having a plan, right?
I know, because it takes work. I know, we know it's sort of like the advice you know and the advice you follow.
It's like, yeah, I have a plan. My whole crypto problem.
you
Like,
act
I'm going
on,
to sell
rather.
Bitcoin when it hits this, and then it hits that. I'm like, I'm just going to hold on a little longer because this is exciting, and then it goes down.
But well, one, I was going to say,
JJ, what were you going to say?
That's about getting better, feeling it, learning it. You know, I think sometimes we can be overly harsh on ourselves for not doing the right thing or not have anticipated something. But this week, when some of my stocks were going, I kept getting these alerts saying, oh, it's moved up. You know, I have the alerts when it moves a certain amount up or down. And I kept getting them. But throughout the week, it was saying, oh, it's up 2.85%. I'm like, that sounds good. That's good. And then the next day it would be, oh, it's down 2.95%. It's like, what's going on? Up and down, up and down. It can drive you mad. But actually, Dana's voice was ringing in my ear saying, you should expect that kind of up and down, up and down. Look at the overall trend line.
Yes.
And Tula, I just wanted to comment on your earlier comment about there's something about crypto, which I really like that statement. It makes you sound like a tagline for a really good rom-com.
I was about to say, that sounds exactly like a movie. There's something about crypto.
There's something about crypto. Let's just remake all of those old movies with crypto
who's going
as
to
a through
star
line.
As you? Reese Witherspoon?
Oh, goodness. I don't know. Kate Winslet. Kate Winslet.
And this is all for our next podcast, which is all about repackaging of bad movies. Probably could do really well. Yeah.
Right. Well, can I say one thing too, though? You're right, JJ, about like Dana's voice ringing in our ears, reminding us about these fluctuations. I think one of the things that has been so amazing for me is we're doing this together. We're able to share our blunders and our hopes and our discoveries with each other. And I mean, that's priceless.
Yes.
You don't get that with passive investing.
And that's what Women Take Stock is about. It's about this group. It's about our listeners, about encouraging and supporting one another. And to that end, we got a great comment from Deborah, a listener. I'll read you what she wrote. Ladies, I am 65, retired 10 years, which, whoa, I wish...
Yeah. How'd you do that, Deborah?
Widowed and just started managing most of my own money. Woo! Thank you for your podcast.
Good for her.
I'm learning right along with you, and I made my daughter start listening too. LOL.
Oh, I literally just got chills.
The way you...
Hi, Deborah and daughter.
The way you present the material is so relatable. Investing is really exciting. Can't wait to listen to all your episodes. So thank you.
That makes me so happy.
We love her.
Thank you, Deborah. And yes, so please, if you're listening, do write in. We want to hear from you, as we've heard from Deborah, and hear about your journey and where you are on it and what you're thinking, what you're loving, what you're hating.
And what questions you have. Like if you have some questions that you'd like us to answer.
Ideally about investing, but we may be able to answer some questions about other things.
Or that we can ask someone else who really knows, and then we can pass along.
Also, if you have any money catchphrases that could also be rom-com movies, send those in.
Okay, and on that note, I think it's time for us to wrap up this show. But first, JD, how can people connect with us if they want to?
They can connect with us. First, you can always find us on womentakestock.com. You can find us on Twitter, Women Take Stock, on Instagram, women.take.stock. And there's a form on our website where you can send us personal messages if you don't want to reach out on social. We'd love to hear from you any way you want to talk to us. So do let us know what you're thinking.
Yeah, or you could say like coming to a theater near you soon, but not.
Well,
really.
and yes, please do review, rate our podcast on any platform that you're using.
And share it.
Yeah, share it. Please do. Thanks for tuning in, and we'll check you at our next episode.